Hi there, ladies and gentlemen. It's James Marley here with Livewire's Outlook series for 2025. I'm joined by Todd Warren from Tribeca Investment Partners. Todd, thanks for coming in. Appreciate your time.
Thanks, James. Thanks for having me.
2024 was a bit of a bumper year for markets. What did you make of it?
You did right. Very volatile year. We had some good periods and some weak periods. In our space, we're battling with what looks to be a fundamentally strong backdrop, but the macro headwinds continue to push against us. China remains a question mark with growth. You've had political shifts around the world. The European Union remains in a somewhat tough space. Change of administration in the US. All of that creates some uncertainties for investors.
Yeah. So for people that might not be fully across which part of the market you focus on, talk us through where you invest and how you invest.
Yeah, so resources specialist. We have a global resources fund. We can invest anywhere in the world in the commodities landscape. Anything mining, energy, soft commodities, anywhere in the size spectrum. And we build a portfolio from a fundamental basis and build a diversified portfolio across those metrics.
We're going to talk about a few stocks, and it's a different proposition to a lot of the industrials or the tech style investors that we speak to, but you've put your hand up. You're going to apply the resources lens to it. What's a resources company that you think can have a great year of growth in 2025?
For us, one of our favoured names in 25 is going to be Boss Energy. So they're a uranium miner. They're just ramping up their first mine in South Australia called Honeymoon Well. They will see their production go from around about 800,000 pounds this financial year. It'll double into the year after that and then go again another 800,000 pounds into FY27. So it's actually a tripling from this year into FY27. And we think that will drive huge growth for their earnings.
Hey, that is pretty impressive. Uranium, it had a little bit of a breakout this year. What's the view on the underlying commodity there?
Look, we're huge bulls on uranium. Obviously, the nuclear energy thematic is really starting to get a bit of a tailwind, albeit not necessarily in Australia just yet. The reality is that governments and companies around the world are realising that in terms of a carbon-friendly, carbon-free power generation source, nuclear is such a great baseload source of that power. The other side of it, of course, is you need uranium to generate the nuclear power, and we've got a situation where we've got a dramatic deficit in terms of the supply and demand balance. A lot of the pounds come from Russia or parts of the world which perhaps are not as geopolitically friendly. So you want to be exposed to those pounds which are coming from, in the case of Boss, Australia and the US, or in the case of Cameco, it's in Canada.
Okay. Commodity space tends to be very cyclical when it comes to the individual commodities. Is there a part of the market that you think, or a commodity that you think can have a bit of a breakout year in 2025?
Well, aside from uranium,
yep.
We do like copper and aluminium. Both of those commodities are very much at the forefront of the energy transition. We do need a huge amount more copper and aluminium to fuel or power the transition at a time when the supply just isn't coming. So you've got a situation where both commodities, whether it's here in Australia, in the US, in China, there's a lack of supply. Demand continues to ratchet upwards, so we've had concerns about China and their economic growth, and yet, for example, in copper, they continue to consume more and more of it. So the reality is the fundamentals around investment in their power grid are exponentially higher, and they will need more and more copper for it. They'll also need an awful lot more aluminium. So we're very bullish on both of those commodities into 25.
Have you got a preferred play in either copper or aluminium you can share with us?
In the copper space, we think a real sleep at night stock is Capstone Copper. It was primary listed in Canada, but it's actually listed in Australia as well now.
I've not heard of it before.
So recently listed here in Australia, but as I say, primary in Canada. They are growing their production through some assets in the Americas, primarily in Chile. And that will see them essentially double their production, but also rapidly de-lever their balance sheet. They've geared up to build the new mines, and we think it's one of the more attractive growth stories in the copper spectrum globally.
Okay, let's switch to the other side of the spectrum. Is there anything out there, a stock that you think probably stay away from? Valuation looks a bit hot, outlook not so good?
Well, I'm going to refer to, we're a global investor, so I'm going to refer to it's a Norwegian gas producer called Equinor. They do produce some oil as well. Now, valuation-wise, it doesn't look so bad, but this is a company that their production is essentially peaked. Their dividend yield has peaked. They're very heavily exposed to gas prices in Europe. Should we see, don't know, but should we see any treaty or peace in the Ukraine, they're very heavily exposed to any new Russian gas molecules coming back to Europe. And we think for those reasons, the risks are a bit high. and the fundamentals don't really stack up that well. So it's an avoid for us.
Now, I imagine as an investor in the resources space, getting a good night's sleep with the type of volatility that comes out investing is probably a little challenging at times. But is there a stock for 2025 that you'd be if you could only own one, that's the one that you'd go for?
Look, I referred to Capstone earlier. Another name, and I didn't touch on it, but Alcoa we do like as well in the aluminium space. We think, Alcoa, it's the US-listed aluminium go-to name. Again, going through a lot of self-help with their earnings. They're cutting off high-cost assets or high-cost operations, and they've moved upstream in terms of they purchased Alumina Limited this year, so that's really added to their portfolio on the upstream side. I touched on the benefits of aluminium earlier, but also alumina, which is the feedstock. So we really like Alcoa. In the parts of the market which we think are a little less liked right now, or are certainly under-owned, we actually think oil and iron ore could see some upside. The market's overly bearish, overly pessimistic on the outlook for those two commodities as well.
What's a contrarian idea that you've got for 2025?
Look, we think the market's way too bearish on actually both oil and iron ore. Iron ore has obviously been associated with the China trade. The market's been bearish on China and China growth, and China property, China steel, and as a consequence, iron ore. We think the market's a little bit too bearish, at least in the immediate term. From that end, we think at the early part of the year, you tend to see supply interruptions, whether it's Australia or Brazil. There is a lack of new growth coming through. So there are a few names that we do like in that iron ore patch. And in oil, look, it's a range trading commodity, to be fair. You do have an overhang of considerable OPEC spare capacity, but we think the market's way too bearish on that. We think the OPEC nations will continue to be very constrained in their supply. We also think there's way too much optimism with regards to new supply coming out of the US under Trump administration. So we think the supply-demand balance actually looks okay, and the stocks look extremely cheap as a consequence of this pessimism.
Have you got a couple of preferred names in iron ore and oil you can share with us?
So in iron ore, we like Champion Iron, listed here in Australia, with assets in Canada. They are actually continuing to grow their production. They're working hard to build out their production of very high-grade iron ore. We think that gives you a unique advantage in a marketplace which is desperate for high-grade units. They're cutting their costs. They achieve a premium for their iron ore, and so we think that's at a cheap valuation a great way to be. In the oil patch, we invest globally. So in Australia, we like Karoon. It's beaten up. No one's liked their acquisition of an asset in the US. They've had some operational challenges in their Brazilian asset, but we think they're through the worst of that. And again, trading at a ridiculously cheap multiple and now starting to buy back their stock quite aggressively. In the US, we like EOG, which is one of the leading unconventional producers of oil and gas in the US. Net cash balance sheet, buying back $5-6 billion worth of stock every year. It's actually a no-brainer. That is a sleep at night oil and gas name.
Very good. Now, when I looked at the performance tables across sectors for 2024, materials, energy, unfortunately the laggards, reckon they can turn around 2025?
Well, look, I mean, we've got increasing noise out of China, which seems that they are taking aggressive steps to shore up their economy. Now, you've got the uncertainty with the Trump administration, but essentially the Chinese Politburo, the powers that be, have said they will do whatever they need to do to shore up their economy. Now, with an under-owned sector like resources exposed to the world's biggest economy, which is set to stimulate quite aggressively both with monetary policy and fiscal policy, we think that bodes pretty well when the generalists out there have been underweight, and rightly underweight to be fair, the resources sector, but with demand looking like it's going to grow, supply continues to be very constrained. We actually like the backdrop.
Thanks very much for coming in and being part of our Outlook series this year.
Thanks for having me, James.
For all you viewers out there, remember, check in to our YouTube channel. You'll find all the Outlook series content for 2025.